Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, everyone, it's definitely been a bit of an up and down week in the market. Things seem to have been improving as of Monday, but here we are kind of today back in the market malaise. But that means there's a lot going on with tokens. So we will jump right in. So first up, I'm going to talk about Abracadabra Finance and GMX. So yesterday, an exploit occurred on Abracadabra Finance, which is a DeFi lending platform. The total exploit was about $13 million. So the exploit specifically happened in a handful of, so Abracadabra is like I said, DeFi lending market, and they offer these isolated lending markets that they call cauldrons. So specifically, those lending markets were attached to GM tokens, which represent liquidity on the decentralized exchange GMX. So GMX was quick to distance itself from the exploit, claiming that it was, completely related to Abracadabra and not related to their platform at all. Abracadabra turned around and said, well, the contracts were audited by the same firm used by GMX. So, not sure what to tell people. So the hacker has not yet, done much. The team did offer a 20% bug bounty for return of funds. And they have also pledged to compensate users for the bad debt to using their own by burning some of their stablecoin MIM. This is the second exploit to hit Abracadabra. Late last year, an exploit actually caused a depeg on their stablecoin. I believe I talked about it here, causing about $6 million in losses. So hopefully they don't continue to be a target. It seems that they are on someone doesn't like them. Spell and GMX tokens were down about the same, 3.9 and 3.5% over the past week. All right, next up, Arbitrum. So a proposal was posted on Layer 2 Arbitrum's governance forum, which basically recommends clawing back funding, which was granted in ARB tokens at the time, to a gaming program. So according to the proposal's authors, the grant was actually approved, this is the wording, the grant was approved during a period of exceptionally optimistic projects that in hindsight proved unsustainable. So this gaming fund, which was called the Arbitrum Gaming Catalyst Program, launched about a year ago. It was meant to grow Arbitrum's Layer 2, the Layer 2 Web3 gaming ecosystem, but it hasn't really done a bunch so far. Treasure DAO was kind of like the biggest thing on Arbitrum. They have migrated away from there. And there haven't been really any show-stopping games that have launched, by the way, at all so far in, Web3 in quite a while. And so Arbitrum specifically has definitely had some trouble kind of getting back clawing any attention into their chain via this gaming program. So the proposal's authors contend that the AGCP has not actually been transparent about their spending. And because they've failed to attract gaming projects to the chain, they should really just claw back this funding and sunset the program. So proposal is still early, but the clawback of this nature is pretty rare. We don't really see this. And so we'll wait to see what governance decides to do. Arbitrum was basically flat on the week, up about 40 basis points. Okay, next up, I'm going to talk about dYdX. So if you guys have not seen, on Monday, the decentralized future derivative protocol, dYdX, announced the launch of a buyback program using 25% of net protocol fees. So if you're unfamiliar with dYdX, they launched in 2021, and they have really been resistant to implementing a buyback program using an enormous amount of revenue that they generated. So again, if you're not familiar with them, originally dYdX launched on something called Starknet, which is a layer 2 on Ethereum. And they launched in 2021. They ran a very successful incentive airdrop campaign, and it was one of the largest airdrops ever at the time when the token did finally release. However, as a result, all of the revenue that was made on the dYdX platform was taken in actual hard dollars. And so that would and filled the coffers of the dYdX trading company, which is the for-profit organization behind the decentralized protocol. In the meantime, users got this token. A lot of people would hope that the token would become valuable, it would do something. Unfortunately, dYdX, after a bunch of tries through governance and other means, decided that they were not going to implement a governance proposal until or do any types of buybacks for quite some time, and this definitely really hurt them. At one point, they were run rating about $400 million of revenue annually. Now, since then, in late 2023, dYdX migrated to their newest version to a Cosmos chain and are running their own chain. They then started offering things like staking of the dYdX token to earn fees. And because the actual version of their protocol has not taken up quite enough on the Cosmos chain, they've really just seen total declining volumes, user numbers, revenues, everything. And as a result, there's really not much left for token holders to take at this point. So that's just the background there. The program, though, it's going to allocate net revenue of about 40% to staking, 25% to this buyback, 25% to the Mega Vault, and 10% to the Treasury's subDAO. So again, their current revenues are run rating at 19.2 million, which is going to indicate about a $4.8 million buyback of tokens on the open market annually. Keep in mind, at one point, they were run rating, like I said, 20 times that. 400 million would have been a much larger, more impactful buyback for the market. They're getting a lot of flack online about this today and yesterday. The token is up 8.2% for the week. Okay, last up, we're going to talk about Barachain. I think I talked about them when they launched, but yesterday, Barachain, they're a new layer 1 blockchain that focuses on providing that uses something called proof of liquidity. They launched, like I said, last month. And they feature kind of this novel mechanism that basically combines network validation which is like the part that secures the network, with growing the users and liquidity in their dApp ecosystem. So a lot more of the application layer is intertwined with like the base layer, which we haven't seen necessarily before. So basically the way it works is that instead of in a proof of stake system, you reward users with stake, like more tokens, more native tokens as a reward for staking and providing security on the network. And usually that inflation rate can look like, for example, that's how Solana works. Now, what Barachain does is that of the tokens that are allocated for kind of like inflation rewards, 15% of those tokens goes to validators, but the other 85% also goes to validators, but they have to then turn around and give those to applications on the chain to do with it what they will. So what we're seeing, so the potential for this is great, because what it means is that not just validators getting all the rewards and then selling those to cover their costs, but you're seeing them get some rewards, but the bulk of the rewards are going to the applications. And the applications, the best thing that they can do with it is use it to grow their user base and their footprint. So they're offering those rewards to get users to provide liquidity. Say if they've got a decentralized exchange, they're using it to, create more like lending markets on their, on borrow lend protocol for all sorts of use cases. And so the thought is that they will basically help them generate activity, which benefits each of these kind of like ecosystem players. By generating activity, they help the apps that earn revenue. Generating activity, they increase things like the blockchain usage, which helps the validators. And then for the users, they get rewarded in these tokens. So it is a really great way potentially to get everybody in the ecosystem kind of similarly aligned. Just to put out there, this is a really new mechanism for incentivizing usage on chain. Don't know how it's going to work in practice. We'll have to kind of see it. Like I said, it just managed to launch. Barachain, though, has been doing pretty well on this news. They're up 26% for the week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.